All right, let's go ahead and begin the week. Check your wallet, check your money. The Money Master, the director of financial newsletters at Newsmax.com, Jeff Yastine, checks in on Wall Street, and it would seem at least a little sluggish maybe here, Jeff, to go ahead and begin the week. It's I don't see any huge numbers up and down here.
No, the Dow Jones has been basically treading around break-even levels pretty much the whole day, and the other indexes, the S&P, NASDAQ, pretty much doing the same sorts of things. So let's just say it's a day where the markets are digesting the gains of last week's gains and trying to wait and see what happens with a Federal Reserve meeting that's coming up, and of course the midterms that aren't too many days hence.
All right, so we'll go ahead and leave that for the moment here. Let's check out what's in the news today. Bank of America, something of a roadblock now, people might remember. There's a record $16.65 billion settlement with the government over all these mortgage-backed securities. But now there's a bit of a stumble here. What's happening with the SEC?
Yeah, usually the SEC in these sort of out-of-court settlements with the big banks, usually the SEC will grant certain waivers to the banks, and basically in return for them agreeing to settle the thing out of court. In this case, Bank of America wants a waiver so that they can solicit private firms for various private types of investments. So if you want to solicit somebody to get into a hedge fund, if you want to solicit somebody to do an investment into some sort of a startup firm, you need to have that capability, and if they don't get this waiver from the SEC, then they may well just take this whole thing to court. More than likely, this is just the sort of thing that's avoidance of handing a campaign issue if you're a Democrat to your opponents, that sort of thing, prior to the midterms coming up. So let's just call it political positioning for now.
Gee, what a shock. Political positioning on Wall Street. I never would have thought that possible. You and I talked an awful lot, and so did everybody else in the financial world, about Alibaba a couple of weeks ago. Now, Unilever, their China sales are down 20%, and I'm reading a couple of articles here that say maybe Alibaba needs to be worried. What do you think?
Yeah, I think that could be a possibility, and some of those same articles have pointed out how Alibaba is trying to do a lot to diversify, expand into the United States and South America. There's some talk they might buy Mercado Libre, which is like the eBay of South America. So that possibility exists, but at the same time, the slowdown in China has been ongoing for quite some time now, and it's quite possible that as the Chinese economy rebounds, and it will rebound at some point, a lot of this talk is going to go away.
All right, let's look a little bit farther down the road here before Halloween. Here comes the trick and the treat, I guess, because it seems as if Wednesday's the day the Fed is expected, at least, to bring an end to this bond-buying stimulus program, of course, otherwise known as quantitative easing. What kind of a ride are we going to have now with this happening on Wednesday?
I have to tell you, I think it's actually going to be fairly smooth between now and Wednesday and probably into the midterms. The reason being that, yes, I believe the Fed will move forward with taking down quantitative easing to zero and essentially declaring victory. In many ways, the energy markets have handed the Fed that ability because with the price of fuel being so much less, that automatically sort of grants, basically some margin for safety to what the Fed is doing here, because people now have the capability to have a little more money in their pocket than they had just a handful of weeks ago when oil was at $100 a barrel instead of $80 or $79 a barrel like it is now.
All right, I got about 30-40 seconds left here. Apple Pay came out last week. Now it would seem that, we'll wait till you get your earpiece in there. There you go. All right,
no
got that. Apple Pay has been rejected by CVS and Rite Aid. Is this just a minor hurdle here? Because there's 220,000 outlets that have accepted Apple Pay, so it seems like we're on the way to something permanent.
You know, these merchants like Walgreens and CVS and Walmart, they hate the credit card companies. They don't like having to pay those fees. I think you're going to see this continue for some time until they see whether or not this alternative system that they've been working on actually does work. If it turns out to be just have too much friction, consumers don't like it, then look for a year and a half from now, 2 years, you'll see more of an embrace of Apple Pay and similar systems like it.
Terrible. I just can't seem to use my cash anymore. All right, Jeff, go ahead. Put Wall Street to bed for us. We'll talk to you again tomorrow. Thanks so much.
Thanks, Ed.
All right, now be sure to see Jeff's latest report on a covert plan to unleash financial havoc by visiting FIRcollapse.com. And don't forget, go to Newsmax.com, click on Money, get all the money news 24/7, 365 from Jeff, Yastine, and all of our fine contributors. After the break, what it's like to be in the middle of Ebola preparations in Africa. That and so much more coming up when MidPoint continues.